Hello everyone, my name is Roy Coach. I'm here with Shane Farrell. Oh God Lord, where are we from again?
yourmortgageyourway.ca.
I keep forgetting. I'm so excited. I'm leaving to Spain today, so just let you guys know that. But we want to get touch base on the first home buyers incentive program set up by the government this year. And I know that a lot of people are excited about it, but we're here to tell you the pros and cons to the first time home buyers incentive. So we all know that now is September 1st, you can qualify. Basically the first time home buyers incentive program, which the government will actually give you, quote unquote give you, or actually lend you or become more like an equity partner in the home you're about to purchase. And they'll give you up to 10% if you purchase a brand new build and a 5% if it's a resale. Now that sounds like a great idea, but there's two problems with this incentive program. Tell me if you disagree here, Shane. One, you can't get it in major markets like Toronto or Vancouver because house prices are so expensive, the chances are you're not going to qualify. So how do you qualify with this, Shane?
Well, they have a max cap of 480,000.
Correct.
Right? So, and of course, in Toronto and Vancouver, you're not going to be. It's going to be very challenging to qualify for that unless you buy a condo that's under 300,000 or under 400,000, which they do exist, right? And again, this is targeted to mainly first-time home buyers.
Correct.
At least there's some movement that's being made just to help them reduce their monthly outgoings.
So, I mean, let's look at it this way. So if I'm going to buy a place, say for $480,000, I have to have a maximum of $120,000 as a family or a household income. So at $120,000, the government will lend you up to $480,000 mortgage portion of it. 5% you'll put down from your own resources, and the government will give you the other 5%. But there's one thing they don't really tell you. This 5% is not really a gift. You do have to pay it back.
Yeah, you have to pay it back within 25 years, or if you sell your home. So if your condo does increase in value, and when you do decide to sell it, you just have to pay them 5% back.
So let's talk about this. So if we look at today's market, and if I bought a condo, say 25 years ago for $480,000, it's probably worth well over $1 million today.
Yep.
And if that was a new condo and I took 10% back as the first time home buyer incentive program from the government, and now it's been 25 years and I paid off my mortgage, I have to give the government back 10% of today's value. So let's say it's 1.2 million. I have to write a check on my 25th year, my last payment. I have to get a check back to the government for $125,000.
That's correct. Okay, so that is the negative aspect, right? But the positive thing is if people can't afford their monthly mortgage payments, this helps them just reduce their monthly mortgage payments. And they can pay it off any time from now, from the time they get it, till 25 years. They've got up to 25 years. So if you're a new family, you've got kids, you've got other expenses, and you need that reduction in payment, it's good to have that option of taking it. I don't like any caveats when I get a mortgage. If I just want a mortgage, I want to know what my payments are and I don't have to bother repaying it back. However, there's some people who are tight every month, right? They've got spousal commitments, they've got kids commitments, soccer, basketball.
Yeah, but I think that for me, I'm not a big agreement on this proponent. I don't want the government to be a partner in anything I do because we all know when the government's a partner in something, they don't do very well with it. Number one. Number two, I feel that they could do the same effect by just amortizing it over 30 years. And the payments and your qualification will be bigger. And if I have a $120,000 combined family income, chances are I'm not going to be buying a $500,000 property. I'm probably going to buy something that's $650 or closer to that type, which is going to fit my family's needs.
Correct.
So I'm just saying for me, you make sure you understand all the pros and cons before you get into this with the government. And again, here in the city of Toronto, you're probably not going to see very many people be able to qualify for this, which I think is kind of unfair. And in the smaller markets, what happens if your property value goes down?
Well, you still have to pay them 5% of whatever the value is. So I think my understanding is if the value goes down, it's what the value of the property is.
Okay, so great. So let's say I buy a place for $400,000 in a small market.
Yep.
5 years later, market takes a dip, and now I have to sell for $350.
Yep.
I have to give back to government 5% of $350. But I'm already upside down, and I'm going to be upside down even more.
Right. So regardless, you're going to be in the hole, right? So you're constantly hoping that your values will go up, right? But this is the case with anything. If you get a second mortgage, if you get another mortgage lender behind you, and if the property goes down, you still have to pay the mortgage
But what
back.
if I can't pay it back? That's another question. What if I can't pay it? What if at the end of the day there's no money to pay back the government? See, that's a question we have to find out. and we'll actually look into that for you for sure. Anyway, if you guys have any questions about first-time homebuyer incentive program, please give us a call here at Your Mortgage Your Way. Our number is 416-640-0930, or you can visit our website at yourmortgageway.ca. Thanks for watching.